How's it going, guys? This is Forensic Forex Deontay, and I'm back with another video. This is episode 36 to the Asian Session Library. Once again, with US dollar versus Japanese yen, we had a successful Asian Session model on Thursday, the 15th, February 2024. Let's walk through it together. As always, we do not trade between 12 p.m. to 8 p.m. I consider this the dead zone or the New York lunch session. Most times than not, you're going to run into a phase of accumulation and consolidation. The market is just building up buy side orders and sell side orders. Trading during this time period can be very detrimental to you as a day trader. What you're going to do is wait for the next live session. So, since this is a dead session, a dead zone, you wait for the next live session, which would be the Asian Open or the Asian Kill Zone. And that's from 8 p.m. to 12 a.m. All these times are in New York Eastern Standard Time. I'm going to be looking for the buy side and sell side liquidity that resides in this time period to trade this time period. A very simple approach. So let's take a look at the sell side. So the only sell side that we have here via 15-minute time frame is this swing low right here. So this 15-minute swing low has sell side liquidity below it. We can't take this 15-minute swing low because it's already been broken. We're looking for unbroken swing points. Now here, when it comes to the buy side here, a little more intricate. Many people may say, Deontay, we don't have a 15-minute swing high. That's not available here. And that's true. What we would do is we'll either take the highest high of the session or take the highest high that forms at 8:15. So here we could take the highest high that forms at 8:15. We'll take that candle here. And then we got the opening price. The ideology behind the opening price is that we know that when price gets above it, it's overbought or it's in a premium. And when price gets down, it's oversold or in a discount. Ideal sell conditions happen above here, and ideal buy conditions happen below here. Let's see what happens when we go through it. So we press play, going forward. So it looks like it's selling at first, and then instantly price pulls back up. That's why I don't like to jump in, right, and rush the session, because I feel like in my methodology, right, in my ideology, the belief is retail traders are the ones that start the session, meaning that they're really enticed, and which direction the market goes, they're going to just be fully committed and over optimistic about the direction. You want to wait and see if you're going to get a purge on buy side or sell side. You can see we purge buy side liquidity above this high up here. So go down to the 1 minute time frame. See that high is right there. And you can see here, that's where we raid, and we're above the Asian Open here. At this point, I'm looking for a entry technique, and that entry technique is simply a swing low that is broken with a fair value gap. And let's see where we get that. So let's play it forward. Notice I wouldn't take this fair value gap because it doesn't meet the requirements. Look closely. Is this a swing low that's broken with a fair value gap? No. So I'm not looking to take that entry technique. That's not the one I seek. If you go through every single episode, you'll notice that the entry technique has not changed. This one here, look at this fair value gap. Does it go through a swing low? No, it does not. It goes through lows, but it does not go through a swing low. This one here, it looks like it is, right? Very close. We got to have a keen eye. I know many people may have different brokers, but notice this swing low is lined up with the actual end or the discount side of the fair value gap. So it's not inside the range. It's actually on the fair value gap. I don't like to use that at all either. I want to see one that's inside the fair value gap between the 2 points. Let's keep going. Price trades higher. And then right around here, this is where we get the entry technique. So you can see our price comes down with speed. And right here, you got a fair value gap from here to here. You draw it out. Notice this right here. There goes that swing low. That swing low formation is physically between both the points. It's not on the actual start or the end of the fair value gap. I want price to be inside the swing low. Sorry, I want price to be inside the fair value gap. This swing low needs to be inside this range. It can't be on the high and it can't be on the low of the fair value gap on the same price point. It has to be just like this, in between here. What do? I look for a shorting opportunity. Why am I going short? Let's not forget why we're going short. Because a lot of time has passed since we broke that high. So I had to wait a very long time, pretty much near the end of the session, to get this entry idea. So you got to be confident that the model will produce, and you got to sit there at times. Sometimes it happens really early. Sometimes it happens in the middle of the session. Tonight, meaning yesterday, last night, it was very late in the session. A one-to-one scenario, right? We're risking 15 pips to gain 15 pips. So waiting for price to trade right back up into that fair value gap. See, price hits it, and at that point, you would look to go short. Where would your stop loss be? Above equal highs or swing highs. And you can see my stop loss is definitely above equal highs or swing highs. Let me play it forward. You can see we're going into IPTA true day as well. So even if we were to mark this out as well, the opening price at midnight is just 12 a.m. or midnight opening price, MOP. And play this out and see how it reacts around that as well. You can see we got 10 pips there. Price comes back above midnight opening price again. And then we got 15. And we got right back down to the Asian open again, once again. But notice the selling opportunity is occurring above in a premium. Though we weren't at our target by the end of the session, that does not mean we have to collapse the trade going into IPTA true day, the next trading day. Going into London, New York does not mean we have to collapse the trade. With the statistical data that I have, I know that Thursdays I'm more likely to be more successful and have higher rewards. So I have that confidence because of the data I have collected over the couple months that we have been trading the model. Noticing that, I would hold that trade all the way through. If not, you as a trader can be very niche and be specific. Whatever you're at by 12 a.m., you can close out. I'm only showing you what I personally do and how I find success. You may want to tweak the model to your degree and your style of trading. You don't have to follow the steps exactly the way I do it. You don't even have to use UJ. You could use AJ if you want. You could use Swiss J if you want. CAD J, GJ, AJ, EJ. You could use all the other yen crosses. Or you can even use some of the majors. I don't highly recommend it, but from time to time, you'll see that the same model does produce in other pairs, not just the yen crosses. I recommend the yen crosses because it makes sense logically that the yen is going to be more volatile during the Asian session. Hopefully, you found this insightful. Peace.